Let's welcome Amit Murarka, who's the Executive Director at Axis Capital, joining in with his view on the sector as well. Amit, Nigel's given us the broad details of what one can expect from the sector in the second quarter. Just wanted your thoughts on how would you play it now? Would you look at higher valued companies which are likely to do extremely well on the EBITDA per ton front, or would you look at valuation reset for lower valued companies, given that the future looks even better for the sector?
Yeah, hi, good morning. Thanks for having me here. So, firstly, just to put the sector construct out, we are quite positive on the space. So we think that cement sector has a good 6 to 12 months ahead for sure, and probably even longer. Things have aligned very well for the space. Prices have started to increase across regions. South, which was the only exception, have also seen price hikes in October. Costs are declining. So we are in a Goldilocks scenario in that sense, a strong demand, declining costs, as well as price hikes. And all of that is actually coming through from a very strong utilization improvement. After almost 15 years, we are seeing cement sector utilizations go to 80% plus. We have seen this is the third consecutive year of almost a double-digit volume growth. So we are very well positioned for the overall sector as a whole. Valuations, we would not be too concerned on valuations. The way we see it, most of the stocks are trading more or less in line with the historical valuation range. There are obviously some which look better to us compared to others. For us, UltraTech is our preferred pick. And that remains so. So we would not get too worried around valuations over here. Okay. And the smaller names, as you highlighted, the small cap names also will have a good showing. Right. We in that small mid cap space, we actually like JKCement the most. We think that north region in India is better positioned than others. There actually the utilization curve is even steeper at 85% or so, and likely will remain at that level in coming quarters and years.
All right. Hi, Amit. Good to see you in. So UltraTech as well as JKCement, they appear to be the picks from, the larger names as well as the large to mid-sized companies. We'll talk about companies in more specific detail, later on in this conversation. But give us a couple of numbers first. EBITDA per ton, what kind of improvement are you expecting on a year-on-year basis as well as on a sequential basis? If you could give us a couple of numbers for the sector on the whole.
So I think at least second quarter we are seeing flattish kind of an EBITDA for the sector on a QoQ basis. YoY, obviously there's a big jump last year. If I would recall the audience here, is that we got hit by the Russia-Ukraine war, energy crisis, and therefore the cement sector suffered a lot over there. So YoY, therefore there will be that normalization of that base, hence the numbers look far better. Even going ahead, like from a third quarter, fourth quarter perspective, at least we are expecting close to a 300 rupees per ton improvement on EBITDA per ton. We will see again, as I said, a declining cost as well as pricing improvement. So currently the pricing that we see in the market today is almost 4% higher than the average pricing in the second quarter. That itself will give a good increase in margins.
Okay, so this is going to be very, very interesting then. In quarter two, you'll have a sequential flattish kind of number on the EBITDA per ton, but on year on year, it'll be much higher on a low base. But as you mentioned, prices are up between 3 to 4%. Input costs as well will cool off because some of these companies will be sitting on high cost inventory and that'll gradually get exhausted in quarter two. So for quarter three and quarter four, what kind of an EBITDA per ton improvement are you factoring in?
Yeah, that's what I said. For the second half, we are expecting 300 rupees per ton. Possibly like between 250 to 300 in the third quarter, and then another probably 50 to 100 rupees further in the fourth quarter. Also to highlight, fourth quarter generally is the best quarter for the sector. Strong demand plus price hikes generally happen quite well in that quarter. So that would be the strongest quarter for earnings for the sector.
Okay, all right. What about Shree Cement? The couple of brokerage notes believe that they are going to be back to their winning ways and maybe at more than 1,000 rupees per ton is something that most are factoring in. What's your view on the company from here on? Do you still believe valuation-wise it's expensive?
So Nigel, we would not be able to talk on individual stocks too much, but what I can tell you is that at least in the current quarter, Shree Cement's numbers, while on the volume, we are not expecting a big improvement, but on earnings specifically, we think that there will be one of the best quarters amongst the cement companies, simply because North India has seen price hike starting July. And cement with and Shree with almost a 60% volume from North will therefore have a better quarter this time around.
Amit, the two big triggers that everyone keeps talking about in the cement space, one is the government push for infra that's been happening for as long as I remember, and the second one is consolidation. That too has been happening for as long as I remember. So your thoughts on both of them, because one, a lot of assets are ripe for consolidation. A lot of companies have, indicated in the past that they want to go ahead and acquire assets as well. And the second one, we have a bunch of state elections and central elections coming in the next 3 quarters or so as well. So in light of all of this, your thoughts on both consolidation and the infra push?
Yeah, so consolidation, I think, is going to stay a theme for a very long time in the cement industry. Like back in 2010-12, we had seen fragmentation happening in the sector. Since 2016-17, we have seen a very good consolidation wave that has come. The top 5 companies, the way we track, which were like 45% of the market, have now become 56-57% of the market. And our view is that in the next 5 years, it will go even higher. Even organically, these companies are growing faster than the smaller ones. So I think that's going to continue in the coming years as well. And sorry, I didn't get your second question you were asking about.
Demand in light of so many elections.
Sorry, yeah. Yeah, so the state election calendar has been announced for November. General election should be like 4-5 months after that. Typically, we have seen election or a pre-election year being a great year for the cement sector. Infra spends are high. Even the private demand gets supported by MSP hikes. We have seen all of that coming through this year as well. Next year is something that we'll have to see. We would not expect a double-digit demand growth next year per se. We already will exit this year at a high base, but we would think that demand momentum should stay strong. Private demand, including the urban real estate, is looking quite good from a longer-term perspective as well, with new project launches happening. I believe the construction costs are a bit subdued, which is also good. It also always helps private sector construction activity.
Okay, Amit, thanks so much for stopping by. Amit, as you're saying, the second half of the year could shape up well because demand is strong, cost will cool off, and price increases as well will come about. But I think you, me, and most cement enthusiasts, we'll be keeping an eye out whether or not there's going to be some inorganic growth ahead of the general election. So let's keep an eye out on that. A lot of whispers doing the rounds. Let's see if the next 2 quarters we do see something happening on that front.
Okay, well, thanks a lot for joining in.